Yes.
That's illegal.
Okay.
Okay.
Avoidance is fine.
Avoidance is
Evasion is illegal.
Yes. Not only is avoidance fine, it's legal.
Yeah.
So you can plan your tax affairs.
Okay. Icebreakers, quick one. Stats SA or IEC? Where would you want to work?
Stats SA.
Stats SA. Prasa or ESCOM?
Yo, this is a tough one. I'll take ESCOM over Prasa.
ESCOM over Prasa, all right. Madagascar or Seychelles? In any way, whether it's holiday or...
No, I'll say Seychelles.
Seychelles.
I'll say Seychelles.
Hey. Public Protector or Auditor General? Which one would you want to be?
The Auditor General.
The Auditor General.
Yeah, no, definitely. I must respect my profession.
Okay, sharp. Okay. Winter, ne?
Yes.
Hot soup or hot chocolate?
Hot soup.
Hot soup.
Yes.
This one is an obvious one.
Okay.
A BMW or Benz?
Obvious. We don't even mention Benz in my house. It's BMW.
Thank you. Okay, Twitter or Instagram?
Instagram.
Instagram.
Yeah.
Okay. The Democratic Alliance or PAC, Pan-Africanist Congress?
Does the PAC still exist? But I will take the PAC over the DA any day.
More Africa.
Yeah.
Cleavage or legs on a woman?
Cleavage.
Oh,
yeah, I'm a good guy.
You are a candy guy. Okay, cashback or rewards points?
Reward points.
I don't know the difference, by the way. Ne?
Yeah, no.
Okay,
Yeah.
here's another one that I don't know the difference. Crypto or any forex trading?
I'll take both.
Or what I do is I allow you to expand.
Yes.
So it doesn't corner you.
So for me, I'll take both. And I know forex trading has a lot of actually, both of them have a lot of bad reputation in that there've been a lot of scams.
Yes, of course.
But both offer investment opportunities if done with the right individuals who are educated in the market. I do think there is the returns from both those for me are attractive because I'm young.
Yes.
And therefore I would be investing for long term. So I would look at a much more riskier portfolio than one that has low risk, say if I was 60 years old.
Yes.
So I would go for both. In fact, I do both.
Okay. You need one here.
I need one here.
The better devil is...
the better devil. The better devil will definitely be Forex. I think, you can...
Sure.
There's definitely much more controllable and known in that space versus crypto. I think a lot of people have described crypto as being a very
a visionary kind of thing,
in a sense, but emotional. But also at the same time, if you look at, let's just take Bitcoin, the value of Bitcoin itself fluctuates so much. It looks like it doesn't really have an underlying underneath it. It does, but I think it's much easier to track from a forex perspective than it is from crypto.
All right, thank you. Peter Josie.
We need to unpack this. We need to unpack.
You can tell me. Someone said, "I would rather live in Pretoria, groove in Josie, or work in Josie." Someone, you just tell me which one.
So I'll never live in. I don't want to live in Pretoria.
Okay.
Yes, I've worked in Pretoria.
Yes.
I enjoy working in Pretoria. It's easy to drive.
Yes.
In the morning, in the afternoon. There are good spots to hang around in Joburg, in Pretoria. But I would live in Joburg. I function in Joburg. Both.
You're a Josie guy.
Yeah, I'm a Josie guy.
Monopoly or Scrabble?
Scrabble, definitely Scrabble.
Okay.
Although, it's tricky, and I'll tell you why. So I grew up in a Scrabble family.
Sure.
So Scrabble is very dear to my heart.
Sure.
But at the same time, the game of Monopoly is such a practical instrument.
Yes.
And I've got two kids, a 6-year-old and a 4-year-old. And I can't wait for them to start playing Monopoly.
Yes.
But when they do, I think I want to emphasize that what we are doing on that game, they must go and do in real life.
Thank you.
Much earlier.
Thank you very much. You still went for Scrabble.
I still go for Scrabble because that's my family. You know?
The final one.
Yes.
Golf or basketball?
Yes.
You might want to tell me your age after the choice.
No, that's
if you want to.
Yes. Yeah. Hey, the choice is neither because it's not a sport that I follow.
Yeah.
Neither. I don't follow the two sports. You know?
Yeah.
But if I were to choose, I'd spend my day at a golf tournament than at a basketball game.
All right, sharp.
Yeah.
Okay, now that you refuse to answer, I'm holding the last one.
Yes.
Would you reveal your shoe size or your age?
I can reveal both. I don't have an issue. So I'm 39, turning 40.
Yes.
And my shoe size is a UK 7.
Okay, thank you very much. Okay, let's start. So, please tell us your name. You say name, where were you born?
Yes, name is Lungile Meso.
Yes.
I was born in Joburg, but then after that, I was born in 1983 to fairly young parents. My mom was 20, in her 20s at the time.
Yeah.
So then I went to go live with my grandmother and grandfather in Luwahomo.
Okay.
With all of my cousins. So there were 10 plus of us in the house.
Yeah.
So you can imagine how wonderful that upbringing was.
Yes.
My grandfather unfortunately passed away in 1989. And it would have been too much burden for my grandmother.
Yeah.
And then I moved back with my mother and father in Kagiso. I spent until my teenage years before I left for varsity. Went to the University of the Witwatersrand, as has always been my dream when I was a kid. And in fact, I can still remember the day I decided that I'm going to Wits. My mom and I were on a taxi, and the taxi went past Wits, and my mom said, "That's Wits University."
We said on the M1 north,
no,
on M1 south.
Kachorisi. So you come from the west, and you pretty much go through not Main Reef, but Ofeta UJ.
Yeah.
At the back.
Isn't it on Tanga Street?
Yeah, well, yeah.
Yes, after the bridge.
Yes.
The cemetery would be on your right.
The cemetery would be on your right.
And then the bus depot on your left and the university.
So immediately after you pass the main entrance one.
Yes.
That's where the conversation was, and I made a decision that I'm going to.
And you look at those big gates and you said, "This is what you want to do."
This is where I'm going. So I went to Wits, did my undergrad there and my postgrad. Before venturing into articles at Deloitte.
Yeah.
Did articles for 3 years at Deloitte, qualified as a chartered accountant, spent some time in Canada before moving back to South Africa. Spent 2 years as an audit manager.
Was it too cold? Where in Canada were you?
No, I loved Canada. It was amazing. In fact, there was a time I contemplated going back. Because
where were you, Vancouver or something?
So the funny story is the reason why I applied to go to Canada was that I wanted to go to Vancouver because of the Winter Olympics.
Yes.
But so that was my first choice.
Yeah.
But what they then decided to do because of the Olympics, they shut down the entire city.
Oh.
So there were no audits. All the companies were I want to say exempted, but there was nothing happening in Vancouver at that time.
Okay.
So I ended up going to a place called Winnipeg, which is one of the coldest places in the world. And I spent 4 months there. Loved it to bits. I lived the Canadian dream.
Yeah.
After that, I traveled the US for 3 weeks. Came back to SA, spent 2 years as an audit manager, and then I decided I think it's time for me to try corporate. I went to corporate world, worked for Atterbury, so that's where I started out. Spent 5 years altogether at Atterbury, but moved between Atterbury, the private listed entity, to what is currently known as a TAC, which is the listed entity. So that entity listed in October 2013. And I was with them up until 2017. Since then, I've been with, I went back to Deloitte, I've been with Nedbank, and currently at Old Mutual Insure.
All right.
Yeah.
The reason you are here
is
for you to tell us about tax.
Yes.
What is tax? What is taxation?
Yes.
What is, and so I'm going to give you my long explanation, my relationship with tax. So I'm not really what you call a Pan-Africanist.
Yes.
But I'm I've got huge inclination to being an African. So every time someone speaks about tax, I remember how we got as Africans, South Africa especially, how we got taxed.
Yes.
And one of the ways, I know someone would say, but taxation has always been there. Even kings have been doing it. But for me, so taxation started around maybe at the 10 of the century. I don't know which one, because we were in the 18th, around about maybe 1898, 1899. So what the colonizers did at the time, they said, okay, it's fine. We need people to work in our farms.
Yes.
And so if an African owned a dog, we did a dog test. We needed a boy tax, so the men would pay tax. So they could not afford to pay with their cows and goats and stuff, because they needed money. They forced them to work in the farms.
Yeah.
And I could imagine when the gold rush started in Witwatersrand, it became too much, where they needed hard labor, and people do not want to work. Because why do I have to work because I could barter with Maki and get all I wanted? So they forced it. So all those taxes formed what we call a tax. So that's according to me. You could see I'm not a finance guy. You would know this better than I'm not a finance guy, but this is what I have. And funny enough, the Mbabata rebellion started because of that. Because Mbabata said, I'm not going to tolerate this. This is rubbish. Why do I need to work for you? What is the reason that I need to work for you? And they hunted him down because they needed to take him out. And there's a lot of rumors of where he ended up. Others said he flew outside, and others said he was captured and stuff. But I'm just giving you this long bit of history just so you understand why not only Africans, but the world over, people have always had problems with taxes. Yes. So tell us, what is tax?
So maybe to just summarize what you've just said, the reality is tax, a lot of people feel that tax is a grudge purchase. You know, particularly in the state of our country, where the top 1% of the population pays the tax. That tax is meant to go towards service delivery and improving our lives. That's currently not happening, and a lot of it goes to, call it grants, whether it be disability or your other grants. So it does create a feeling that it's a grudge purchase, and I think it already is that, but it just amplifies that feeling. So I 100% agree with your view from a Pan-Africanist.
Yes.
And I think it goes like that through with everybody. But one of the positive things that you also have to look at taxes, somebody once said to me, if you're paying taxes, you're making money.
Well, celebrating what you shouldn't be celebrating.
I know, but that's the world that we stuck in. So essentially, taxes are really meant to be there in order to fund the government to do certain things. One of them is service delivery, and unfortunately, even bailouts come from our tax money. And one thing that I think a lot of people miss about tax, and going back to my statement, if you're making money, you're making tax, is South Africa taxes on a worldwide income basis. So that essentially means if you are making income, as long as you are South African tax residents, you essentially will pay back tax to the South African government. There are ways to not become a South African tax resident, even if you are a citizen. There's many rules in terms of how long you have to be out of the country, etc., etc. But I think it all boils down to this: if you are a South African citizen, you generally would be a SA tax resident, and you would be required to pay tax on income.
I'm tempted to ask you two questions at the same time. This is what I battle with as a podcaster, because I'm a motor mouth. I speak a lot, and it's very difficult to type in. So there are two things. So one of the reasons I wanted this, I've actually realized that the rich have mastered taxation. They know loopholes. They know the skills, how they make tax work for them.
Absolutely.
But and then as well as a flip side,
Yes.
they are the people who it pinches the most, and you seldom find a poor person. They say he owes SARS this amount of money. It's always the people that we think are rich who are nipped by this. Maybe as they are running away from it. So I want you to pack it and you'll answer it later.
Okay.
I wanted to continue with what you were saying.
Yeah.
So here's the thing. You said a South African who is a South African citizen who pays tax. But there are two, and there was a new, I think, regime to say if you're a South African, or if you're a foreigner living in South Africa for the money you earn, or if you're a South African and living in, can you just explain that in few for people who want to work abroad and stuff?
Okay, so SA will tax you on income that you generate if you are a tax resident.
Okay. So what does that mean?
That's the fundamental, the tax resident.
What does that mean?
So generally,
sorry about that. Continue.
So generally, a person born in South Africa who carries on any trade or any activity where they generate income in South Africa will qualify as a South African tax resident. That would also apply to a foreigner who moves to the country and spends a certain amount of time in the country and generates income in South Africa. There may be a point in time as well where that foreign resident become an SA tax resident, and as a result of that, they are then required to even have their worldwide income taxed in SA. But it's a very complex thing in that
it is so much complex.
In that the different countries have what we call a double tax agreement. So essentially, it is agreements that say, how are we going to tax citizens of our country when they are in different jurisdictions and they are carrying on trades in those jurisdictions. So it's not as clear cut, as to say, as long as you are making money in South Africa, all of your taxes are going to be owed here. And there are ways that you can generate money in South Africa and it gets taxed elsewhere. And as a result, the money goes there. So it is very complex.
Yeah, it is very complex, and I want to attempt for you to make it in layman terms because it's very difficult. Yeah. So here's the thing. Let me just give you a typical. A Zimbabwean man comes to South Africa. Yes. He rides a Uber. Yes. He works at Mashiane deliveries. Yes. And then he does the Uber. Maybe he gets paid maybe 5,000 per month. Yes. From that individual, Mashiane. Yes. With that, how does tax come in? Okay.
So 5,000 equals 60,000 rands per annum. So generally, if that individual there are a certain number of days that you have to be in the country for continuously in order to be regarded as a tax resident, they need to be unbroken. So, i.e., yes, you can be in a position where you are earning money in South Africa and you don't qualify as an SA tax resident. So, therefore, that income that you generate is then owed to the Zimbabwean government. But again, there's also the element of a double tax agreement. So it's not necessarily to say that money is going to leave the SA government and go to Zimbabwe. So when I was working in Canada, I was taxed in Canada. And then the question was then to say, the money that I generated in Canada versus had I been an SA tax resident, okay, what would that have come out at?
Yes.
So in this particular case, it was exactly the same. So I ended up paying the Canadian government because I earned the money from Canada. And rightfully, that's where they got the money. So
we shoot the Politically Incorrect podcast from the Digital Photography Studios. They are based in Pretoria. If you need any information, kindly contact them on the provided information. Thank you. Right, so we battled with understanding the complicated tax internationally. So let me do this. Let me not attempt, because maybe my confusion might not be the audience confusion. Yes. So let me do this. So the VAT, I think around 1978, you'll stop me when I give, yeah, around 1978, it was around, maybe it started around the 14%, and we grew up knowing VAT to be 14%. And now people call it the Ramaphosa 15%.
Okay.
Explain what does that mean?
Okay.
Yes.
Okay. VAT is simply value added tax.
Okay.
Okay. So value added tax, the first thing I want you to make out is that the person who pays value added tax is what we call the ultimate consumer.
It's directed to you.
Yes.
Okay.
So now when you go into a shop and you buy milk that is at 10 rand plus VAT,
Yes.
you are the one who's paying that VAT amount,
Yes,
and giving it to SARS.
yes,
The people in the value chain generally would be registered as VAT vendors,
okay,
which means they are essentially acting as agents on behalf of SARS, where they collect VAT and they get back the VAT that they paid to the other suppliers from SARS. So you find that something starts off in 2 rand.
yes,
Okay, so somebody has raw material for 2 rands, then they sell it to somebody else, they put VAT on it.
okay,
Okay, so when they let's assume it's, let's say in this case 30 cents. Now it's sold at 2 rand 30. They take that 30 cents, they collect it from vendor B, and they pay it over to SARS. Now vendor B, remember, has paid 30 cents to vendor A. He now goes and collects back his 30 cents from SARS. So one took the money and gave it to SARS. This one goes to SARS and takes back the 30 cents. Okay. So you can see in the equation we are back to 0.
yes,
And that process follows and goes, and the money grows, or the VAT portion grows until it gets to you. When we now sell you the milk for 10 rand plus VAT,
okay,
you are 150. So you, because you are not a VAT vendor,
yeah,
and you are not carrying on an enterprise as a you are
yes,
buying milk for the house.
yes,
You are the person that ultimately then pays that 150 in VAT.
okay,
That 150 in VAT goes towards the tax pool as well.
yes,
And you know, and the government can use.
Yeah.
Which is why when people always say taxi drivers never pay tax, it's incorrect. They will never pay VAT. It's the question is, what type of VAT are you not paying?
yes. So here's the thing. So 2 questions. Number 1 is, as a layman, I'm assuming that cycle of exchanging that on behalf of tax ends at the tax collection season, where they balance out in this financial year. You took my tax, you did this, they'll get it back. Is it my assumption is correct?
So when you say tax season, I'm assuming you're talking about
But
the year.
the collection, yes.
Yeah. Okay. So the VAT system works a little bit differently to what you would be exposed to as a
Consumer?
as a personal taxpayer.
Okay.
Okay. Because when you do your tax return, it's going to open now in
Yes,
July,
yes.
and it's going to run up until the end of November.
Yes.
That's for your income tax.
Okay.
VAT vendors have different categories where you claim either on a monthly basis.
Okay.
Or rather, you submit your VAT on a monthly basis.
Oh.
So therefore, you submit what you've paid.
Okay.
You submit what you've collected, and the net gets paid to SARS.
In every month.
Every month.
Is it a choice, or all enterprises have to do it?
So if you carry on an enterprise in South Africa, if you make more than R1 million of income from that enterprise, you must register as a VAT vendor.
Oh, okay. Now I understand.
If you will make more than 50, you think you will make more than 50,000, you can register voluntarily. You don't have to, but you can. And in that, there's different periods that you can choose. So you generally find that you submit every 2 to 3 months, and you then choose the different months that you submit at. So you don't have the burden of submitting every month. But generally, big corporations will submit every month.
Okay, because they've got employees who specialize in it.
Yeah.
Yeah.
There's employees who specialize in it. But remember, you are making the amount of money that you are, or VAT that's flowing around,
okay,
is quite sizable.
Okay.
And you generally need that for your business, because you must remember, when you pay your supplier, you are paying them VAT.
Yes.
Okay. And then at the end of the month, then you claim it back.
Okay.
But at the same time, you are generating income where you are charging people VAT, and SARS says, I want my money. So you are paying that back to SARS.
Okay.
So generally, that's why it would be on a monthly basis.
All right. So I want to park pay as you earn later, but let's continue on this line.
Yeah.
What makes business people fall?
Yes.
Julius Malema owed. Let me just remember. I don't know what year was it, because he claims he incurred those things in his 20s.
Yes.
It must have been around 20 million.
Yes.
And I remember it was around the time he was still in ANC politics.
Yes.
And I wonder, why would someone in his personal capacity, right? Why would he owe SARS 20 million? It's shocking. So there was this a big case between Evan Khoza of Orlando Pirates and the Taxman. Yeah, it was huge.
Yes.
We are afraid to talk about it, by the way. Yeah, we are chickening out. We don't tell us you must be brave. We are afraid to talk about Evan Khoza and his tax matters. But Julius, we can talk about Julius.
He's going to come. But it's fine.
Yeah, so tell me.
Yeah.
So a layman, how could Julius Malema owe tax 20 million? Did you follow the case? What would be a typical tip fall of someone owing tax that much?
So I'm going to mention a couple of factors.
Okay.
But I'm going to go back to the statement that I made at the beginning, that you are taxed on every single cent that you generate income on. And that's very important.
That's very scary as well.
That's very important.
It's scary because it's you don't know, do I fall there? Would I also one day owe?
Yes. Yeah. Number two is that people don't plan for tax. Okay. So people generally think that tax is paid by people who are employed. And that's a very big misconception.
Sure.
If you generate income from any other source, even as a businessman, you are liable for tax.
Okay.
And people don't plan their tax affairs. So, typical example, you receive, you receive a contract, a tender, and from that tender, you are then paid. So, for example, 10 million rand.
Okay.
Okay. Now, when somebody receives 10 million rand, they think this 10 million rand belongs to me. Okay, that's not correct. That 10 million rand is what we call gross income. That gross income, there are certain expenses that you can deduct from. There are certain rebates that SARS will give you. So, for example, as an individual who's below the age of 65, I qualify for roughly 17,300 rand as a rebate of my tax bill. So it therefore means after I've made my deductions, I come to a number called taxable income. That number, we then apply percentages onto it, depending on which structure you are using, whether you are an individual, a company, a trust, a small business corporation, or any other structure. Then we come to a tax bill. Now, you go back to the example where you received 10 million.
Yes.
Okay. Typical example, 10 million would, if you received it in your personal name, you would be in the bracket where you pay tax at 45%.
Sure.
So
wait. You scared me now.
I am.
Yes.
Yeah.
Look. Okay. I'm just gonna. What I want to do. So for now, and probably some of my audience. So let's say that 10 million.
Yeah.
I'm given by my late uncle.
Yes, an inheritance.
Yes. I don't know in what way would he give it to me, formally or informally, but he says Mfanaka 10 million.
But remember you said late, so he's passed
Yes,
on.
he's passed on.
Left you 10 million.
Yes, 10 million.
Yeah.
So it's classified as inheritance? It's bracketed differently and taxed.
There's what we call inheritance tax.
Okay, let's put it that way, because what I want to do, I want everyone, including myself, I learn easier when I relate to a story. So let's say my late uncle gives me 10 million.
Yes.
What happens from there?
Okay. So 10 million rand would be regarded as gross income.
Okay.
So it's income in your hands. And there's what we call inheritance tax. I haven't really checked up on the latest of inheritance tax to see what the percentage is.
Okay, yes.
But simply put, there is a tax on inheritance that you will have to pay.
Sure.
Okay. There are some what we call exemptions that you would get when you receive an inheritance. So there's a certain amount of money that the government says, this part we are not going to tax. So you remove that out of the 10 million, and then, pardon me, then we tax what's left. So the important message, irrespective of where you receive income, always think that you're going to pay tax on it.
Any income?
Any income.
So you spoke about a certain psychological figure. It's 1 million, and it's most of us is just 1 million. If I'm below 1 million, I'm too poor to be paying such things. I shouldn't be worried. Are we safe with that thinking?
No, you are not safe with that thinking.
Ish.
So if you take an individual, you have a sliding scale in terms of what you earn. Okay. So as an individual, like I said, you get a primary rebate of 17,300, for example.
Okay.
In order for you to not pay tax, you have to make roughly about taxable income of about 95,000. Because when I take that 95,000 rands and multiply it by 18%, I get to the 17,300 figure, and then I minus my rebate of 17,300, I get to a tax bill of 0. Anything above that amount, you are generally paying tax. Okay. So misconception that if you are making $1 million, you are not. If you are making less than $1 million, you are not going to be paying tax.
Sorry. Maybe the confusion came from me. Yeah. I was talking about a business that makes $1 million, and the ones that, a business enterprise that those that are making over $1 million, and those that are making less. Because we're not making millions, so we're not worried. So we fill out that thing called affidavit. You know the affidavit. Yes. So we say no, now we don't make a lot of money. Yeah. So that thinking, is it a safe thinking? And
maybe is the confusion here about the VAT part? Remember when I talked about the million?
Yeah.
So that's separate. So VAT and income tax are two separate things.
Sure.
Okay. So the 1 million threshold is if I'm going to make turnover of more than $1 million, then I must register as a VAT vendor. That's that.
Okay.
Okay. Then you run a small business that makes less than $1 million rand. Okay. There are different ways in which you can run a business.
Okay.
You can run it in your personal capacity, what we call a sole proprietor.
Sure.
Okay. So that generally means you will be taxed at the rates that an individual would be taxed at.
Okay.
So they range from 0 to 45%, depending on how much you make on the sliding scale. You can also run your business as a company. And then we can then say, if you only own shares in that company, and you register as a small business corporation, that your tax percentage is no longer going to be 27%, but it's on a sliding scale. And that sliding scale basically says, if you are below a certain amount, you get taxed at lower rates because you're a small business corporation. But the thread that puts tax together, irrespective of who you are, if you are generating income, you are subject to tax. The question is, how much tax are you going to pay is dependent on how much income you make, the deductions that are available to you, and the exemptions available to you, plus the rebates that you can get. But that thread stays, and we always need to ensure that we are thinking about tax and we are planning. In fact, generally what people do and don't do, which is a lot of what the rich actually do. The rich plan for tax. So tax is something that you need to plan for upfront. There's what we call tax avoidance. Okay, tax avoidance is legal. So i.e. tax avoidance simply says, how do I optimize my tax that I'm paying? So how do I ensure that I pay, call it as little tax as possible within the legal means?
Yes.
Okay. Tax evasion, which is generally where these cases end up called somebody is running away into another country.
Yes.
That's illegal.
Okay. Avoidance is fine. Evasion is illegal.
Yes. Not only is avoidance fine, it's legal.
Yeah.
So you can plan your tax affairs.
Okay.
So for example, if I'm an employee, one of the things that I could do is I could maximize my provident and pension fund so that I get taxed less. So essentially what...
So you are saving more?
Yes.
And then so when the tax wants to hit, you say, no, this one doesn't earn much because his money is saved for modern time, is saved in the cloud.
So,
Yeah.
so typical example, if I'm saving 10,000 rands a month,
Okay, let's do this. Let's give example of someone who earns what's the average round figure? 20,000.
you can take.
Yes, let's say 20,000. Let's say someone who earns
Let's go a
20,000.
little bit higher. Let's make
Okay.
it 50,000 per month.
How many?
I'll tell you why, because I wanna make the figures work.
Then it's fine.
Because,
Yes, let's go 50,000.
yeah.
Someone who earns 50,000.
So 50,000 per month, you typically are going to earn 600,000 rands per annum.
So okay, 50,000 is gross.
Yes.
Okay,
gross.
grossing at
I
50,000.
want to start at gross.
Sharp.
Okay. Which means you are making 600,000 rands per annum.
Okay.
Now, that's you and that's me.
Okay.
You decide that on your 50,000, you are going to save 20,000 rands towards your retirement.
Okay, sure.
Okay. I then decide that I'm going to save 10,000 rands towards retirement.
Hold it there.
Yes.
Is it taken immediately from the pay slip of what they call garnishes and stuff? I don't know much about that.
Yeah.
Do they take it directly from there, or it gets into my account and then the other stuff kicks in from my bank account? What will be the difference?
Let's look at the mechanism where you are an employee.
Yes.
You get 50,000 rands. You tell your employer,
Okay,
who
sure.
gives you a provident fund or a pension fund, and says, "I want you to deduct 20,000."
Oh, so it's deducted from the pay slip.
Deducted from the pay.
Thank you. It makes sense.
So
Sure.
you deduct 20,000. I deduct 10.
Okay.
And let's assume we don't have any other expense.
Yeah, we are all at 50,000
We are all at
gross.
50,000 gross. Now, you are getting taxed on 30,000 rands per month. Okay, I'm getting taxed at 40,000 rands per month. And the reason that is that 20,000 rand is a deduction that's allowed per the Income Tax Act. So that money is not taxed, not currently. So your deduction is 20,000 minus 10,000. I pay tax on 40,000, being 50 minus 10. You pay tax on 50 minus 20, which is 30. Your tax bill is a lot lower than my tax bill. You follow? Simply because of a decision that I've made to say I'm going to invest 20,000 versus 10,000.
Okay, so as we speak now, I will get into a break. As we speak now, I'm immediately thinking, yeah, they don't get you now, but they'll get you there when it comes back. Ne?
Yeah.
They will get you there when it comes back.
Yes.
So is that where those tax-free savings come in? Or how does it come in? Because everyone is afraid, they might miss me now, but whenever I'm going to get that money, they're going to be talking about taxes. How do we
kindly contact
how do we work around that? But you'll tell me after the break. So we're talking about the advantages you could use on how you package your salary to evade tax. And no. To avoid tax. And then, so a typical layman like me who doesn't understand tax is always fearing that, but the taxman will get me when I go to collect my money that I was saving away. Then tell me how you do those gymnastics.
Okay, 100% you are right. You are benefiting from not being taxed today.
Yes.
To be taxed in future.
Okay.
But the whole point about it is that you are taking non-taxed money and you are investing it and it's growing. So if you invest 10 rands versus investing 15 rands and they grow at the same rate, the 15 rands will give you more return than the 10 rands. Okay, that's one. Number two, there are two ways in which you can get out that money. You can get it out before retirement, okay? Or you can get it out after retirement. So because the whole point is to encourage you to save up until retirement, if you do it before retirement, you will be penalized by taking it out earlier.
My money.
Yes, your money. But remember, had you not invested it and been taxed initially, you would have paid tax anyway. And what you can do with somebody who understands tax and a financial advisor is you can work out a point where it says, at what point does taking out the money early not make a difference versus how much I would have been taxed had I been taxed.
Oh, that's a calculation.
That's
you
a
have
calculation.
To. Okay.
And don't try and do it on your own.
Yes,
Get somebody else to look at it.
I understand.
But the whole point is that then the government then says, we will then incentivize you when you retire and we will tax you at lower rates. So they give you bigger exemptions. So they say to you, the first 1.1 million of that is not going to be taxed. The next part is going to be taxed at 18%. Then the next bracket is 25. So they give you an incentive.
Okay.
You know?
Yeah.
So you then have to make a decision and say, where am I comfortable? And that's where you need a financial advisor. And hopefully you get a financial advisor who understands the tax implications.
Okay.
Because you shouldn't just look at how much I am going to earn today, but you need to consider how much I'm going to get out later.
Okay.
After tax.
All right, it's fine. Too complicated. It doesn't look like it's easy. It's easy gains, because even if you go there, they're still waiting for you there.
Yes, they are, but there are benefits.
Yes,
there are benefits, and we need to get into the mindset of sitting down with people and doing calculations, looking at models, projecting them to the future, and saying, what does it mean for me today?
Yeah.
So my message around tax, whether you are running your own business, as a small business, you want to scale it in the future, you need to think about tax. You need to plan for tax, and you need to do that upfront.
Okay.
Okay. So get yourself a professional who understands tax. Please do not try and do tax on your own.
Very dangerous.
I studied tax for 2 years. In my third year and my fourth year, I've been through the legislation.
Yes.
I studied some case law. There's post qualifications from a tax perspective. There are people who get masters in tax. There's a lot of complicated things in tax. Please don't think you can do tax on your own. Get somebody who can help you professionally.
Okay. Yeah. Talking about that, others were ill-advised, or
yes.
Others took chances by others who were advised properly, and they got into problem with tax. So
yes.
when I was doing the research, I found something called tax loopholes. Ne? It involved transfer pricing, blah, blah, blah. I know, when I read it, when I prepare, I find it too complicated. Do you know ways of watering down this thing for a layman so they can understand, but it still keeps the juice? Because remember, you're not giving tax advice, you are just speaking about tax for those who could know just how. Because people, you must not think you will hear what he says and go and try it by your own. Yes, that's a disclaimer. So what is tax loopholes, and what does it mean?
Okay, so I don't really like the word tax loopholes.
Yes.
Because I can tell you that tax is a very complicated subject that gets looked at by different professionals.
Okay.
Tax practitioners, accountants, lawyers, etc., etc. So there may have been periods where, tax loopholes showed up, but I can definitely tell you that SARS closes them very quickly.
Yes, yes.
So which is why I don't like the word tax loopholes. Mm-hmm. However, if we go back to the conversation about tax avoidance.
Yes.
Okay. Tax avoidance essentially uses the means that are in the Income Tax Act to ensure that you can pay the legally minimum amount of tax.
As an individual.
As a company, whatever.
Yeah.
That's what it is. And somebody who's well equipped in the tax legislation will be able to assist you with that. Do not go to a fly-by-night person who says, I can help you with your tax. Please check their credentials.
Okay.
Check if they are a registered tax practitioner. Check if they've got a tax qualification, or they've studied tax for some period.
Yes.
Generally, your chartered accountants, your lawyers, your tax practitioners would be the right people to go to. So one of the things that I like to advise people to do is to maximize the amount of interest they can earn.
Yes.
Okay. The Income Tax Act gives you a tax exemption of roughly 35,000 rands per annum. So essentially it says if you make 35,000 rand worth of interest, that you will not, you don't have to pay any tax on that. Now 35,000 is a lot of money, so not everybody is going to reach 35,000 worth of interest. But if you make 2,000 rand worth of interest, you don't have to pay any tax on that. So sometimes I think what people do is they've got money sitting around in the bank, and they're earning 3-4% per annum, but that money is lying there the whole year. So why don't you take that money, go put it in a fixed deposit for an entire year and get a better rate? So maybe you earn double what you, and you are not going to pay any tax on that interest. So those are the type of things that you need to be planning for.
Okay, Meso.
Yeah.
What I wanted to understand is, I want to understand why tax is so dangerous. We know why it pinches us, and the danger is people who are trying to evade it. But am I wrong to assume that those who are caught by tax are those who are trying to avoid? Or people who honestly evade? Honestly, is it because I know DJ's spoke about his tax woes, Malema spoke about his. I'm sitting here thinking, are these people who were, because the initial thing is people had money they did not want to give to the taxman, and they got caught with their pants down. Or is it a case of honestly these guys did not know what they were doing, they just got surprised? And this is what scares me. So I want to understand. So I'm a makeup artist. You are a caterer. You gig, I gig. In this 2023 calendar year, I had gigs that gives me around 500,000. Yours gave you 800,000. When we were writing our quotations, we did not include tax. So we are all made less than $1 million, you and I. But we had other earnings. Me as a makeup artist, I also sell computers. So when I include all of these earnings, they amount to $1.1 million. When you include other earnings as a caterer, you're selling bikes, they amount to $1.1 million. But that is an informal business. This is an informal business, as well as my makeup is informal business. We just tend to make a lot of money out of these informal businesses. Is the taxman looking at us funny? Because that's the confusion.
So let's go back to the initial point I made. You use the right word, earnings. I use the word income. You get taxed on income / earnings. That's what you get taxed on. If you are making an income, you are going to get taxed, whether it's informal or it's not informal.
Let me use the word that is trending, that is popular nowadays. So other people have businesses. Other someone say, no, I have got a hustle. So that hustle, you see, the word hustle is sometimes misconstrued as informal business. It's not something that I do. It's like, so I'm selling swimming pool equipment. I'm selling microphones. But all these things give me earnings that are above R1 million. Well, even though it's not formal business, maybe maraba start and then go and sell them in Josie. But all of these hustles and earnings, I earn over R1 million. Is SARS looking at me with are they licking their lips?
I don't want to say SARS is licking their lips.
But they want something.
It's not that they want something, it's that you are generating an income, so therefore you are earning, you are generating taxable income. So it's not a question of informal or not informal. Whether you are informal or formal, you've got a PTY limited.
No. You know? I want you to understand that the reason I'm stating these examples is I do not even have a registered company.
Yes, not a problem.
I don't have a registered company. It's just my hustles.
Yes.
All-Star. I know where I can get All-Stars for you.
And then,
but all of these earnings make me 2 million on a year. So SARS wants in.
So, yes, to put it bluntly, SARS wants in because they legislate from a legislative perspective. You are obligated to pay tax on income. Whether you have a PTY limited or you are doing something informally, at the end of the day, you are generating income. So then we go to the tax table and say, you hauna company. It's just machine.
But VAT of 15% I've been paying when I'm doing all of those things. Isn't the taxman happy that this 15% I've been giving.
And I think that's sometimes where people get caught.
Yes.
They try to justify those things, to say,
Yes.
no, but it's a VAT here.
Yes.
So the taxman has got his money. But there are different types of taxes. Income tax, there's VAT, there's value added tax, there's inheritance tax, there's all sorts of tax, there's estate duty, etc., etc.
Okay.
So
let's go back to the example.
Yeah.
So the taxman would want in. So
Yes.
from me being a makeup artist, you being, but if we were doing it at 900,000,
Yeah.
the taxman does not want anything.
No, and I'm going back to my example.
Yes.
There's no such. Because you must remember, we are going back to,
Busting my bubble now.
we are going back to the tax tables. Okay, and I would encourage everybody, go to Google and type in tax tables 2023/2024.
Okay, I'll put it here.
Yes. And essentially what you will then go see is you'll see a sliding scale.
Okay.
The sliding scale will say if you make between 0 and 275,000 rand, you get taxed at 18%.
And it's earnings and income.
It's taxable
Earnings-
income.
A taxable income.
Yes, taxable income is earnings minus deductions allowed by SARS. So for example, you sell bikes, okay? You buy a bike, go Marabastati for 1,000 rand.
Yes.
You come back Mokasi, you sell them at 1,500 rand.
Yes.
SARS is not going to tax you at 1,500 rand. They're going to say 1,500 minus 1,000. Because remember, cost of sales.
Yes.
So then, let's assume you don't do anything else.
Yes.
So you get taxed on the 500. That's what you get taxed. That's what we call taxable income.
Okay, hold it there.
Yeah.
Let's continue with that thought.
Okay.
I did not tell SARS that
Yes.
that 500 rand, it's my take. So what happens?
Okay.
So I do a lot of those 500 rands.
Yeah.
Yes, I did not tell them. How would they know?
So here's what people also miss. People think just because I get into a bank account, therefore I don't have to pay tax. Okay. The law says you have to.
Oh.
You understand? The law says you have to. So then there are other people who then go and receive cash on the side. Okay? Now, I'm not saying that if you sell 10 of those bikes in a year and you end up with 5,000 rands in your pocket, that SARS is going to come for you. All I'm saying is that legislatively, you are required to declare the 5,000 or go back the 15,000 as income minus the 10,000 as cost of sales and the 5,000 as profit. You are legally obligated to do that. You decide not to do it. Is SARS going to find you for that 5,000? Chances are they not. Now, amplify that on a bigger scale. You go and you generate 15 million rand worth of income that you receive in cash, and you pay 10 million rand in costs, which are deductible. Now you've got 5 million. What does my shani start doing? You go to a dealership and you buy your car cash. You start living, the high life. And that's where these things that we call lifestyle audits start creeping in.
I go to Instagram.
You go to Instagram.
Soft life.
Now let me go back to that part where you now go and you buy a car cash. Any amount that is above 25,000 rand in cash, if you go to an accountable institution, for example a dealership, they are obligated to report to the government, to the and I could be wrong here, but the FSCA, that this person has made a transaction of 25,000 rand in cash.
Yes.
They are obligated to do that.
Yes.
So now it lands go SARS for no man. Mashana oregile 5 series cash 1.1 million rand. Now SARS comes and says, Mashan, where did you get 1.1 million rand? Because according to your tax return, where now you said you work go spaza shop and you make 60,000 rands per annum, as a result you don't pay tax because you qualify,
Yes.
you are below the threshold. Now SARS comes and says, where does this come from?
You are performing outside your bracket.
Exactly. Well, you're performing outside your declaration.
Yes.
Call it a bracket.
Bracket. Oh, what you declared, what you told SARS that you are in.
You are in. So
Yeah.
so you follow.
Yes.
Then SARS is like, Papa, come here. Let's.
So it's also dangerous to punch above your weight. The way that you declared.
I don't want to say it's dangerous to punch above your weight. It's dangerous not to declare to SARS.
Yes.
That's me. I'm advising you to declare to SARS. If you declare, you are safe.
Okay. We are closing now. There's a gentleman who said he got 200,000. He
Yes.
saw a bike.
Yes.
He bought it around maybe 140.
Yeah.
And then they gave him the bike. He started the car and he left.
Yes.
He just put it in, American style.
Yeah.
So what would be, so that dealership would go and declare somewhere that a gentleman came and what is dangerous about that?
So,
is it dangerous for the dealership or for the guy who bought the bike?
again, I don't want to use the word dangerous. I
Yes.
want to stick to what the legislation says.
Yes.
The legislation says, and the legislation has been set up in such a way to say, we know there are illicit money flows.
Yes.
Okay, and there are different mechanisms that we want to capture them through. One of the illicit money flows is that we conduct our transactions in cash so as to evade tax.
Okay.
There's nothing wrong with you taking 140,000 rand of your money and going to buy a motorbike
bike.
cash.
Yes.
I just want to get that clear.
Yes.
There's nothing wrong. But when you do that, that dealership is required to declare and say,
Yes.
Mashani bought this for 140. Then the institution that's been empowered by the government is going to come back and investigate and say, Mashani, where did you get this 140,000?
No,
and
I
then
get it.
And then I simply say, nah, I took out the 140,000 rand out of my bank account, and here you can see the transaction. And the reason why I wanted to do it, because into the dealership bank, like
Yes.
like DMX
DMX.
in that movie, you know, that's what I wanted to do. Nothing wrong with that.
Yes.
This is no, actually, no. This is money that I can't account for it. I don't know where it comes from. Then the government says, okay, tell us where you got the money.
Yes.
Now you account for the money. No, the reason Kenale Chelete is because I've been buying and selling bikes and
Yes.
and the government simply says, no problem. You were supposed to declare this income to us. You didn't. So we are now
Then-
So this is typically what happens with
Okay.
with SARS,
Okay.
which is where the large tax bills come from.
Okay.
Is that not so SARS is gonna tax you what they should have taxed you had you declared.
Okay.
But then after that, they're gonna hit you with penalties, okay, which are legislative. So
Yes.
sometimes that penalty says 10%
Yes.
of the value that you did not declare.
Sure.
And then after that, then they're gonna say, when were you supposed to declare this money?
10 seconds left.
And then they run interest up
Yes.
until the date that you pay.
Yes.
And then they say, this is your tax bill. And that's how those guys end up with 20 million. So, going back, please don't try to defraud SARS. There are very smart people who work at SARS.
Yeah.
The point here is do your tax planning up front, do your declaration. And if you do your tax planning up front, you can minimize the tax that you're going to pay.